It is Friday, October 25th, 2019, and this is the TriggerCharts pre-market rundown. Everybody can hear me now? Okay, there we go. I'm not going to go through everything. I'm going to tell you a couple quick things, though. Number one, I want to mention we will not be having a webinar next week on the 1st of November due to the fact that we are going to be out of the office all day. So if you come here and nothing's happening, well, it's because we're not here. The second thing is I just want to make sure you all understand this for educational purposes only. It's not offer to buy or solicitation of any kind or recommendation at all, simply for educational purposes. So there you go. We'll kind of get right there, and let's kind of talk about what's going on all this right now. All right. All right, let me see everything set. Okay, good. So, economic reports. I got to tell you something. Over the last week or so, we've seen a variety of different economic indicators come out in the U.S. Not talking about international, but the U.S. only. And basically, when it comes to the U.S., we are definitely in a slowdown. Not terrible, but there is clear slowing that is going down on in the U.S. economy. We've seen things from, except for housing. Housing looks pretty good. Housing is pretty strong and staying on a pretty good strength. But industrial production, capacity utilization, retail sales that we saw last week, durable goods, these things are a real problem. We had a big week for earnings this week. Matter of fact, the most stocks in the S&P that were reporting in any given week happened this particular week. So we saw about 125 different stocks from the S&P 500 report. Kind of mixed, but yet at the same time, I think that we could describe it as better than expected, better than feared. And that is a big idea that is going on right now in markets, that we have a situation where companies are beating maybe a little bit on earnings compared to analyst estimates, and realize that estimates came down significantly into this quarter. At the same time, revenues holding up pretty well. So generally speaking, there's some good things to be said about expectations versus reality. And remember something, a lot of what's built into markets and how markets operate is all about the idea of expectations versus reality. What do we think was going to happen? We'll price it to that point, and if we beat that point, we'll reprice the markets to that level. And so far, it's really interesting. We haven't seen a lot of conversation about concerns about the future, even though there are a lot of conference calls, guidance, and outlooks talking about the toll that the trade war, the trade skirmish, kerfuffle, disagreement has with their ongoing decision-making process and how it's clouding some of the decisions. We haven't really seen a real marked concern about necessarily margins in a way that I had expected so far. Companies have done a really good job at defraying costs, and it looks like a lot of that cost factor has been pushed upon China and the companies that are supplying the goods. So a lot of companies here in the U.S. have really done a great job at weathering the storm. Of course, if tariffs go up, that may be another discussion entirely. And if we do see that there is a prolonged length of this entire trade war, that will start getting more and more concerning for stocks. But the other thing that we're looking at is next week, next week on, I think, the 31st. I think it's the 31st. There is going to be, or maybe it's the 30th, it's the Wednesday. So the Wednesday of next week, we're going to see a Fed rate decision. And expectations are for another 25 basis point cut. Fed are really pushing the idea that maybe this is going to be the last one for a while. It's possible it's the end of their, we'll put this in little quotes here, mid-cycle adjustment. That's what they're calling it. They got to come find a name that everybody feels good about. So they come up with this mid-cycle adjustment, meaning, hey, things are really good. We just went over a little bit on the upside when we were raising rates, and maybe what we're going to do now is adjust them back to where we think it should be, considering the fact that we overshot a little bit to the upside. And investors are still looking for a pretty good bailout from the Fed. So that's really important to look at. I think that's something that we need to see. There has been a really interesting thing. This is really, I think we've talked about this before, but there's been a flip-flop between value and growth. And what we've seen is that over the last year or so, those companies involved in areas like utilities, although those are at an all-time high, some staples, some more of the lower price earnings, lower price book companies, those companies that have really strong balance sheets, but yet don't have a lot of growth opportunity in the future. They're more steady eddies. They're more companies that are just simply, I would say, going along, blue chips potentially, versus the growth side of the equation, which is more of our go-go and our sexy stocks, those stocks in the technology area, those stocks in the healthcare area that may be in biotech. But these are the kind of the sexier stocks on the growth side. Well, growth has been not only beating, but absolutely, unquestionably trouncing the value side for the last year and a half. Now, we've seen this many times before, and if you listen to what I've said before, we've seen it back in '99. There was a few other times that I've seen this kind of distortion with the ratio, or I would say the differential between the performance of the growth side of the stock market versus the value side. And it's on the small, mid, and large cap overall. And what we're finding is that there may be a really good opportunity for a valuation reversion trade looking at the value side of the equation. Well, now we're starting to see things change. Recently, we've seen that the growth stocks have started to sell off a bit. And when those have been selling off, we've been finding that what's being bought? The value side. So the rotation into maybe a lot of people's portfolios that are thinking that maybe we're at the top of the market edge here, and maybe it's a good idea to start thinking about more protective, defensive style of investing, and maybe that would do well. So that's been something that's really been interesting to look at. This stuff is from last week. Okay, durable goods came out yesterday. Kind of disappointing on that. Down negative 0.1% versus a plus 0.1%. I believe was the number. Well, that was a leading indicators. That was a leading indicators number that came in at that. Durable goods also disappointed though. Housing has been improving. I think the lower rates and the fact that we have a much better mortgage environment has been very good for these companies. What else do we got here? ECB has not made a move. Mario Draghi's last-ditch effort before handing over the reins to Lagarde has been to reduce rates from negative 0.4 to negative 0.5% for the ECB key rate, and also restart bond buying program to enhance the stimulus. And that was then. I think it's kind of the last couple of meetings. No changes at all right now. Getting ready to hand over the reins. Of course, Brexit's been a big issue in the news today, and not only today, but the last few weeks. You're going to see a lot of market movement on that. Watch the Great Britain pound, the GBP USD, and look at that and watch the pound, and you can see kind of some reaction with the markets. Moving markets this week, clearly Microsoft hit a home run when it came to its earnings. One of the big things is Azure, its cloud platform. And they've been stealing business, it looks like, from AWS, who came out with numbers today, didn't look so good. We'll talk about Amazon, really had not a slow, well, they have a lot of growth inside of their AWS, but the AWS growth has slowed. Now, listen, I don't know if you were around for the back in the days when Dell Computer was out there and everybody was thinking that, okay, this stock can grow 50% a year because everybody needs a computer. But at 50% per year, if you think about that, over time, everybody in the world would have to have like 8 computers on their desktop at once. It's inevitable that a company slows down their growth. Now, it doesn't have to slow it down to a crawl, but there is a basic product process, the S-curve, if you will, that you will see that build out growth of a new technology, and then all of a sudden it will slow down. So they're slowing down to 39% growth. That's not a terrible slowdown. However, we'll look at a chart and see what's going on there. That is dragging down the NASDAQ Qs as well as the rest of the market. We have Tesla came out with earnings yesterday. Magically, unbelievably, we're supposed to come in at about a 42% loss, major gain. And there's a lot of things that really went well. I think this is the same thing that we saw at the same quarter last year. And we have to be aware that Elon Musk likes to move things around a little bit and possibly pull things forward, making things look good, squeezing the shorts, because that's his big goal, is really to wreck the shorts, the people that don't believe in Elon. That's a big goal of his. Next week, we have the Case-Shiller Housing Index. We have consumers' confidence and, of course, the FOMC rate decision. So we'll talk about all these different stocks. Intel also came out with earnings. Pretty good numbers from Intel, beat by 20 cents or so. So let's get right to it. Also, I'll put right here any of the things that we're going to talk about today. You could actually see inside any of the windows that we look at today. You can get a 10-day free trial of the Commander Series, the #1 rated of all indicators on the TradeStation platform. There's a 10-day free look that you can get there. So thank you, Kevin, for sending that out. Appreciate that. Let's get to a few things I want to look at. Let's look at the, all right, let's start looking at a couple things here. Yeah, that's what I want. So where are we on the KRI? Remember we talked about this some time ago. This is the key reversal indicator, and basically this does this one thing only, uses one symbol only, nothing else will work. SPY is the symbol, and then everything tags off of that, all of our calculations underneath this indicator that you see right here on your screen. Basically, right now we're in a +1, markets are near equilibrium, but what I want to show you here is a couple of things. I want to show you these areas that we pointed out last week still hold as really good buying opportunities when we do see these clusters form. Some of the selling opportunities that we saw, just the short term. Again, these are short-term reversal signals. That's it. Nothing special about this other than if you are in equilibrium, this markets will usually trend to stay within that direction that we've seen in the previous move. Oftentimes, a market in equilibrium is a good market to feel relatively safe with, not to get too concerned about, well, do I need to go heavy short or heavy long? Just be on a neutral overall allocation. So we're right now in that range of markets in equilibrium. That's kind of a good thing. So let's go over to now. Here's something interesting. I just have this on my list. You know, a lot of people are looking at all the stuff that's going on with Juul, and that Philip Morris, Altria, bought a big chunk of Juul. They're taking a lot of this off of the markets. The conspiracy theory is that this actually was bought by Philip Morris in order to crush it. I guess it's possible. We've seen this before. We've seen renewable energy companies being bought by, like, let's say, old style oil or energy companies, only to crush them, take them out of business. And I think this is really fascinating that when we look at this particular chart right here and we start seeing that, look at this move. I mean, this is when the news came out, when Juul was having to, vaping is really bad for you. Now people are going to be going back to cigarettes, it seems. I don't know how much sense that makes, but it's kind of interesting that they're going to go back to that level. What you're looking at right now is the Commander Series. The Commander Series gives you the top line on the area up top here. That is basically a multi-time frame mini chart that shows you from whatever time frame, from 30 up to, let's say, weekly. So right now we're looking at the ES. Let's pull those up and see where we are. On the left is our 60-minute chart. We can make these charts whatever we want. On the right is our daily, and you can see very clearly that we are in a momentum move. This is the aileron indicator, momentum move up. We're sitting right on relative support. Let's kind of look at that, zoom in. See that support that we're seeing right there? Really can't get below that 29.95 number. Right now, these SPUs are at 3,001, not really wanting to move that down. We'll see a little bit of a fair market value adjustment on the open, right down to about 3,000. But right here, when we look at this, we're looking at really close to about 29.96 is that support level on that. But, I don't see, down to 29.88, 29.96. Not a lot of real concern here unless we really break down on some news or something that really turns dramatically. The Qs, on the other hand, we're finding that there is some support here. Right now, look at this. This is our 60-minute chart. And even though we're breaking down right here, look at that. It's been holding this 29, I'll get the exact number here, 79.25 level pretty well. And I think it's pretty good because when we're holding that, we're not seeing the ability for the stocks to break down, even with bad news from Amazon, which we'll talk about in a second. I think it's pretty interesting that shows us that there is still a big buy program on right now. There's a buy the dip program that's going on that's pretty active and aggressive, and there's a buy the dip program and a buy at any point going on. Getting below this level on this is a 60-minute chart, you got to notice that there is a hole. And when we look at this, we can do this a couple different ways. Let's draw this little box here. There's a hole right there when I look to the left. And if I kind of bring this up a little bit, really is, I don't see a lot of really good support in this whole area at all. And when you look at the support levels that are of a concern right here, it doesn't look to me as anything that I would say that could hold if, in fact, we do get some drawdown. So back down to 7,900 looks a little bit decent. But again, I still don't see a lot of support there on the 60 either. There is a good support down at the 77, I'll call it 77.45 level, which is well below our charts here. Let's see what that is. Yeah, I mean, right now it looks like, from a daily chart, there's a lot of work to bring it down. You'd have to really get past, I would guess, about 78.49. So right now there is some weakness in this chart. I would expect that if we see a continuation of some of the technology companies getting hurt or concern, moreover, I mean, we did see Twitter down about 20% yesterday. Facebook came down in the face of it, but is holding pretty well. Facebook's earnings aren't out yet. Currently trading down about 76 cents today. You'll notice something about Facebook. It just can't seem to get below these levels right here of about 182. 180 is definitely an area. Did get down to 175 for just a moment at the beginning of October. But this range, this consolidation that we're looking at here in the range, I would call it from about 191 to about 180 is pretty substantial. It's got to be a break, and it's going to be all up to earnings to see what's happening. We even had Mark Zuckerberg on in Congress right yesterday, in the last couple of days, talking about what's going on with their privacy, getting lambasted by senators and Congress people, and stock didn't seem to care one iota. Even with Twitter fading 20% with the concern that there's going to be a slowdown in social media spend on advertising, didn't seem to care. As a matter of fact, Facebook was up slightly yesterday after initially dipping down about $2.50. So Facebook seems kind of strong, although we're still thinking that a lot of things that are going on in the social media space could drive this down pretty significantly. We'd be looking at a target probably close to about 174 on Facebook. Let's go to some of the stocks we talked about today. Amazon, let's take a look at that. All right. Amazon currently trading at pre-market down about 88. Was down about 125, so it's recaptured about 40 points already today, which is good. We targeted somewhere about 16, I think it's 1625. Let's go on this side. I'm sorry, wrong side. Let's go on the daily. And if you look back, and you look at this really good support right there, about 1625, right in this area of support. When you're looking at some targets, it did get there actually last night. Overnight, it did get there, and we would look at this whole range here as really good support. Again, right now trading at about 1690, down about 90 points overall. But I would kind of look to pick this up at about 1625 if it drops from there. We're in a market that really is very forgiving right now. I don't know if necessarily is going to be a significant amount of downside until something really breaks dramatically. But right now, it does look like there is some downside, and there is a bit of a hole. Again, just draw this area. It's just nothing right kind of within. Let's make this a little bit smaller here and bring it up. There's kind of nothing in that area. It does coincide right to this level, about 1689, where we are right now. That's where it's trading right now, right down to that low. If you do break, though, I do think there is a lot of opportunity down to about that 1625 level or so. There's a high volume node right within there, a lot of congestion, a lot of history, a lot of volume. That's an area that it would seem that would be a magnet to get to if, in fact, investors believe that this is an ongoing problem with the sales that they did miss, and if they do believe management. A lot of times what we're seeing this earnings season is that investors are saying, you know what, the hell with it. We think that management is giving us some negative outlook, and you know what, we really don't care, because if in fact the trade war does get relief, or we do see that there's something better in the future, we're willing to wait it out. And don't forget, index funds hold a major part of this. So when you have the Qs, you have the S&P 500, they're all holding this. And the average investor is buying ETFs these days, and they're just buying it because they just want to own the market. And as such, the underlying stocks inside of there are getting a really good play. So realize there's a lot of market mechanics that are going on right now with more people working, more people putting money into their 401k plans and their pension plans, that going directly into passively managed funds, active as well, or other areas, but it is funneling a lot more money as we see the jobs growth do well. That's one of the reasons why jobs numbers are so very important. We'll see another jobs number coming out next week. The concern is, are we going to see the same jobs number slowdown that we saw last month? Is this a situation that is going to be endemic of what we're going to be seeing for a while, or was last month's number just a hiccup in the big process? Was it just a slowing for no good reason? So I want you to consider the fact that we are looking at this as a buy the bad news to most people because they think the Fed's going to be there and the future looks a lot brighter if, in fact, we do get some relief from the trade war. Intel, INTC, enter. Intel trading up about 3%. It was trading up about 9% after hours last night. came back pretty much, had about a 20% beat, currently trading at about 53.76. This clearly, if you look right here, there is some resistance at the 53.57. It is pre-markets. We'll see if we can get past that level. If you can't get past the 53.50 level, I would venture to say, and we'll zoom in on this, this is a pretty wide range right here. The box tool, I use the box tool a lot. That's your range you got to look at from 55 down to about 50 or so. I think that's some important numbers that you want to look at. And of course, if you look from right to left, because I teach this all the time, always be looking left, right to left. Always look left, look left. And when we look at this and we look at the screen, we want to make sure we look from the time frames on the top of our Commander series, from the longest time frames, where we have the weekly in this situation, down to the 30-minute. Whatever the longest time frame is, that's our overriding trend. We look from there to the daily, we look to from there to the 240 or the 90, the 60, whatever we're looking at. And then on the chart, we also always look left. And I'm going to draw this for you just to prove it. We look from right to left, always look left, and find areas inside of here that there is some holes. Where those areas of holes are is the potential for vertical move through time that's fast. These are the areas that we want to look for. And again, a lot of this is on the information on the instructional material that comes with the 10-day free trial that you can get over on TradeStation for all of the TriggerCharts products. I also mentioned that anybody that's new to TriggerCharts, if you buy the Commander series, you become a monthly subscriber to it. It's not that much money. It's the cost of one trade, especially at the current commissions that we have, one trade, and you'll make this all up if it's a decent trade. $149 a month. That's cheap. If you buy it separately, it's like $225. You bought all these different, the altimeter, the radar, the multi-time frame screen. All this would be about $220. You get a pretty good discount. I think it's about a 40% discount on the bundle that you're seeing right here, aside from Aileron. Aileron on the bottom that we're looking at here is not included. That's an extra add-on. You could do that, bolt it right onto all of your charts. But when you look at the this, you can get another 4-hour training course, free, online, at your leisure. You can go through it. It's timeless, done with a great technical analysis. Myself, we did it some time ago, but it's an evergreen. It teaches you all about this. Anybody that signs us up, just email us and tell us that, hey, you know what? I just got a subscription to the Commander series. Anybody that has a subscription that has not, in fact, so far received that, email us, info@triggercharts.com. Just simply send it on that way. Do yourself a favor. Take some trials this 10 days. You'll find out the power of this, and it really should pick up your trading pretty significantly in terms of your accuracy, the ability to have higher confidence. You know, how many of you are out there, not having a lot of confidence in your trades? And you're just like, well, I want to buy that, but I'm not sure I'm going to do that. I'm thinking about this. Oh, let me wait. And then you know what happens? What happens? It runs away from you. How many times has that happened to you? You don't want that happening. What we want is to have a high confidence. And of course, what we have here is, and why we built this, was to have multiple time frames and multiple indicators to give us the confidence that that trade is something that I can enter into. I know my downside risk. When the upside happens and there is the area that we should be actually moving out of, it turns orange. And you can see that there's a lot of orange on these charts right here, right here. This will keep you in the trade and out of a bad trade. Above the red line, do not short. Below the green line, do not go long. Pretty easy. All of this is in the instructions inside of the tutorial we have that we send you, or that's available when you download the TriggerCharts Commander series. And by the way, the way to do that, if you're in TradeStation 10, you just go to the Trading App Store updates. Go right here. So you click your apps on the top. You go to the Trading App Store updates, click that, or you go to the Trading App Store and just go over to find. Once you do that, log into your account, your client account over at TriggerCharts, and then what you do from there is simply go to TriggerCharts, click on the trial that you want to get. It will take a little while to kind of go through the process. Usually you need to just do a quick restart of TradeStation. Then when you go to the Trading App Store, updates in your apps tab, it will be there for you to actually download and use for 10 days at no charge. All right, what else do we have? We did Intel. Okay, that's good. Microsoft. Microsoft down a little bit today. we're seeing, I mean, this is a classic consolidation. Look at this. I mean, this is massive. Now, this top line, 142 down to 136, holding really nicely. That's pretty intense. I want to talk about crude for a second. We've been talking about this the last couple of weeks, but I want to show you something that really popped out at me on a daily chart. We can look at this at different charts, but does anybody notice something very significant here? There was it held support on its high volume node. This line that we're looking at right here, when it comes to the blue line, see the blue lines? The blue lines are high volume nodes, where the most volume is taking place of any particular security. That's often a place that you want to watch very carefully. What we're finding right now is that when we look at crude, it could not go down, even though we had some questionable situations happening with builds in the crude inventory numbers on Wednesdays and on Tuesday nights, could not go down. And now that we're seeing that possibly we're getting a little bit, I would say, more friendly with the Middle East, there may be some potential for some deals to be done. This is interesting also because Saudi Arabia said that they will keep production tight. Remember, last time that Saudi Arabia wanted to get the Aramco IPO off the ground, they wanted to see that prices of oil were higher, so they may constrain and significantly constrain the the building, if you will, of oil inventories. All right, what else do I got here? Oops. Do that a lot. Gotta remember to change my click. Oh, I want to talk about luck. Okay, this is interesting. So luck and coffee. Look at that. This is in range 2156. This is an area we bought it at when it did get to support about 18 and change. We targeted this level. Very easy to target, right? Very easy to look at this because what did we do? Very easy. Simple to see that right down on the bottom here, it held support, it held support, it held support, it held support. You know, that was a reasonable buy. We saw the aileron started moving up to the positive side. Good sign. Where's the out? We recently took a position out right about here, 2150. Went up a little bit higher, but right now it looks like this is the level that's going to be the biggest concern. Currently trading at about 2135 in the pre-markets. We're going to end it right there. We're going to tell you that, of course, if you have any questions, just send it right to us to info@TriggerCharts.com. We'll be happy to answer that, and we'll make sure to get all that information. This will be on YouTube, on our YouTube channel, as well as on www.TriggerCharts.com, where there's a ton of educational videos on trading. So I want you to make sure that you use us. I want you to increase your profitability. That is our goal, and that's why we have so many people that are happy with our products. Just go and read all of the trading insights that you'll get off of the TradeStation reviews. You'll see people are doing pretty well with this, and we get calls each and every day and thank yous all the time. So I want to thank you for your time today. I'm going to pick it up in 2 weeks, not next week. We're not going to be on next week, so 2 weeks, and we'll see you again there.